I think it really starts with talking with the client, just what is it they need, right? I need to understand where are they today, where are they going, and then even beyond that, so that we can start to establish a plan that works for them, right? Understanding their goals. Are they expanding? Are they acquiring? Are they upgrading equipment or even, looking for real estate? There's a lot of clients that we're interacting with right now. We're doing a lot of ground up construction, kind of outpatient facilities. So that's where we're seeing a lot of requests right now.
Welcome to Medical Money Matters, the podcast where you can find experts, answers, and resources so that you can achieve mastery over the financial and business aspects of your practice. Welcome, everyone, to Medical Money Matters podcast. I am joined today by Eric Gonzales, who is the Senior Vice President of Healthcare Banking and is the Market Director for Umpqua Bank. So, Eric, welcome.
Hey, thank you. I'm excited to be here.
Glad to have you with us today. I'm excited about this whole conversation. I know with our consulting practice, a lot of times we're talking with physicians and medical groups about big things that are going to take some extra capital. And frequently what I find is that there's a lot of questions about banking and about borrowing money and about banking relationships in general. So I'm really glad that you and I get to have this conversation today. So
thank you.
I would love to have you just start by telling our audience a little bit about your role at the bank. And I know that you have a new one, so maybe the current one and your most recent one too.
Yeah, I've been in this role since November of last year. And like you mentioned, the market director for healthcare banking. I'm leading the charge in a number of states that Umpqua Bank is pushing into. California, Arizona, Colorado, and Nevada, and Texas.
Wonderful.
We don't have branches in Texas, but we have a sizable book there already. So we continue to bank a lot of the healthcare and doctors in that area. Yeah. So I'm currently, like I said, expanding into these markets, and we're looking for bankers. We've hired a couple, one specifically in Phoenix, close to hiring somebody in Denver.
Great.
And then I've got some opportunities that we're looking at in Southern California and then in Nevada. So we're working through that.
Well, we'll just put that out there to the audience. All the talented healthcare bankers, call Eric. He's growing. He's got a job.
We are growing. But yeah, so that's where in the healthcare banking space, it's such a wide, it's such a wide net, right? There's sole practitioners, there's physician groups, there's large hospital. I scaled up that way, but I know we can do it all. And that's why we try to make sure that when we talk about healthcare, we're not just talking about one particular, market.
Yeah.
I kind of our teams focus on, the physician groups, sole practitioners.
Yep.
We do have another group here that focuses on a larger aspect of credit.
Yep.
And like I said, we can do it all varying sizes.
Love it.
My previous positions, I was a senior credit administrator. So it's unusual to see somebody go from credit to sales, but I wanted a new challenge and help the bank expand into these markets. And I've for the last 15 years of my career, it's really been on policy, on credit, and managing the risk of this healthcare portfolio. Mm-hmm. Our portfolio is roughly $2 billion in assets, got about $1 billion in loans, and we're focusing on the bank's footprint, the 8 states that we're in, but Texas is included. And even for those larger credits, we do expand across the whole United States.
Great.
Yeah. But
wonderful.
I've been in banking for 20 years, and the majority of that is really centered in healthcare and commercial banking.
Mm-hmm. Mm-hmm. Fantastic. Well, thank you for that. And we'll make sure that we get Eric's contact information into the show notes. So anybody that has further questions or wants to follow up or learn more, we'll be able to reach out and find you. So we'll make certain of that. Well, I'd like to jump right in and have you maybe walk us through the process for getting a loan if a medical practice needs to borrow some money. And kind of at a high level, how does that work?
Oh, absolutely. I mean, I think it really starts with talking with the client, just what is it they need, right? I need to understand where are they today, where are they going, and then even beyond that, so that we can start to establish a plan that works for them, right? Understanding their goals. Are they expanding? Are they acquiring? Are they upgrading equipment or even, looking for real estate? There's a lot of clients that we're interacting with right now are doing a lot of ground up construction, kind of outpatient facilities. So that's where we're seeing a lot of our requests right now. When you're talking about what's the process, right? And it starts with that conversation, like I just mentioned. And then understanding and how can we, help you getting tax return. We need to look at the financials, right? We need to grab tax returns, understand the cash flow. What is the existing debt today? And then what is the new request? How do we accomplish that?
Mm-hmm.
And then it's just structuring. How do we structure this so it makes sense for the practice and the practice needs? That's the biggest part, is because, I would say this, not one is the same, right? Everybody has a different request. Everybody has different goals. So that's why I think it's just so critical to have those discussions early to find out, again, where are you going? And then where do you see yourself in 3 to 5 years? So.
Well, that's fantastic. I know we frequently talk with groups who are contemplating something big, but they don't really know exactly how to ask for it or what information is going to be needed. And I think you and your team do a beautiful job of just kind of having those conversations in a more relaxed style instead of, here, fill out this 50-page form and upload all your documents.
Right.
That comes later, but yeah, that you're really able to suss out with the medical groups and the physicians what they are wanting to do. And what are going to be the uses of the funds as they're going forward. So, and it also strikes me that sometimes we'll start with a group and they have a business plan, but it's kind of that variety that's on the back of a cocktail napkin, that kind. And so
I know those ones. And that's the best part of it, is people are, I love to get on whiteboards and understand exactly how does this all work, because there's so much nuance to it,
Yeah. I love it. Well, it's the back of the cocktail napkin, I think, is the whiteboard is a big step up from that. So
that's true.
We love that. We love that. Well, so maybe I'd delve a little bit further. Like, how do you evaluate groups for a loan when they come to ask for one?
Right. I'm actually going to go back to that whiteboard, because, when you start to get into these ownerships of practices and group practices and management companies, that can get very convoluted, right? There's opcos, there's holdcos.
Yeah.
Like I said, the management fees, trying to understand, well, who owns what?
Mm-hmm.
And then how does this cash flow from here to there? And then understanding, what are the other things that you're planning on for the future? Because we need to also not just, we don't want to just set up a structure that doesn't make sense for what your plan is in the next, year or even beyond.
Yeah.
There's a lot of physicians that are buying in, and physicians coming out. So that is the biggest thing, is just understanding the structure. And like I said a second ago, everybody does it a little bit different, right? So you can't assume that the setup is exactly the same. And one of the things I appreciate about our teams and our policies that we have is that we can structure things, or they're tailored, right? Nothing is cookie cutter.
Yeah.
I've really appreciated that about the bank, in that we're going to do things that make sense, and we're going to try to work with you to try to find the best, structure. So
that's great. That's great. Well, that's a good lead into just thinking a little bit about the different types of loans that are out there that are available that physicians may have heard of.
Right. We could start with your traditional term loan, right? Those are typically for, some type of acquisition, some type of just a refinance of existing debt that you've had in the course of business. Real estate loans, obviously, lines of credit. But I think what I ended kind of with that last one, lines of credit, because what we're seeing a lot of is kind of these roll-ups, right? Groups that have 1, 2, 3 practices, and they're moving up to 3 or 5 or even 10. And then there's that next level too, right? Where they're at 10 and they're wanting to go to 20 or 30. So, we give opportunities to look at different types of lines of credit, where those could be helping with the acquisition. If you're in an acquisition mode, we can help you leverage your practice to accommodate that, to
Mhm.
accomplish your goals, and set that up so that we're not really in your way. We're allowing you to conduct your business with a certain set of parameters, right? Because the last thing we want to do is set something up where we're slowing, them down. We don't. That's not the intent.
Yeah.
If they know what they're doing and it's structured appropriately from a legal standpoint and a credit standpoint, then and if you're giving us a little bit of information about who you're acquiring, we can figure that out. We can figure it out really quickly. That's one of the keys to our success is speed to market.
Yeah.
I can't
Yeah.
emphasize that enough. And then there's that other aspect. If they're doing a de novo, we can figure that out too.
Yeah.
So typically those de novos are on a little smaller scale, but and you can have a
Totally.
two
Yeah.
prong approach too. So again, I think there's so many opportunities out there. And also to go a step further, yes, we could do your real estate, we can do ground up construction,
Mhm.
leveraging the practice to purchase real estate or to do ground up construction. And the last thing would be our SBA products too, right? There's great opportunities that we have, maybe not in this department, but we have another SBA group that can help facilitate that. And what I really appreciate about the SBA and those opportunities is that you're starting out here, but you're going to grow. And we love to see the success stories that you grow within the organization.
Yeah.
Um, you go from SBA to small business to
Yeah.
commercial, corporate,
Yeah.
the sky's the limit, right? So,
Yeah. I love that. And I love that notion of using those small business administration loans as the catalyst to get the
Mhm.
busy. The doctor has a twinkle in his or her eye and they can do the de novo startup or they can do a
Right.
small, acquisition or a small expansion with an SBA loan and then moving on up, going conventional and get better terms and all of that. So that's fantastic. Could you talk a little bit about SBA programs and kind of how that might be applicable for physicians?
Yeah. I mean, if we're talking about kind of a sole prop or just a sole prop that's expanding, you we'll utilize the 7A program, right?
Okay.
The 7A program is meant to expand, jobs,
Yeah.
create dreams, and help out. I mean, that's the thing. It's a credit enhancement for the bank so that
Mhm.
we can still do these types of loans. And that's why I like to talk about success stories because we've seen it where they
Yeah.
start here and move up.
Yeah.
We can do real estate for SBA loans, and then we have SBA Express lines. Those are a little smaller working capital, small term loans. But yeah, there's a great opportunity for those, and to keep in mind too, even though we're talking about some existing practices and maybe acquiring another
Mhm.
practice,
Mhm.
we'll try to look at it first, right, to understand, is this something we can do with our traditional healthcare financing platform?
Yep. Yep.
I don't want to put you into an SBA product immediately. I'd like to try to see if we can help you conventionally. And if we need that credit enhancement, then we'll seek that type of loan or guidance.
That's a great distinction, and thank you for saying it that way to just underscore for our physician audience that the SBA, when you say credit enhancement, it basically means the government is coming in and helping to guarantee some of the loan so that a group might be able to qualify for a little bit more than they might ordinarily under your conventional loan programs. So thank you for calling out that distinction. I think that's something sometimes people don't quite appreciate about how the SBA works. So,
Right.
the other thing that I've often thought about, and I find it fascinating, but sometimes people don't make the connection, and that is that your role is really sales. Like you have a goal to get loans out, to get credit out into the
Right.
community. And frequently, when I say that, as we're talking with physician groups about them wanting to do something and they need to borrow money, there's usually a little apprehension around that. And I'm often saying, no, no. I think that the
Right.
bankers that I know, like you, are
Yeah.
very excited about loaning money to physicians in general. Like you
We
consider
are.
them a
And
good.
it's actually, I'm glad you mentioned this too, is that we see ourselves as bankers, right? Banking isn't just about giving out a loan, it's also helping with the deposit aspect of
Yeah.
things. Because the rev cycle for these particular businesses is very important. And so we have very strong treasury management products. We work with Rectangle for some of our smaller physicians, and that's a great product.
Yeah.
And commercial card, we're trying to help out with that aspect. I would say that our bankers are trying to lead with deposits because
Mhm.
it's such a hard conversation, and trying to make sure that you're helping them with that rev cycle, right? That's why I say banker, not lender. Trying to make sure that you understand this is, we're wanting to do a full relationship and help you with all aspects of your business. And sometimes that does start with a loan, but also it can start with deposits.
Thank you for saying that. We've gone into several practices where I think perhaps they just didn't really look at banking as a relationship. They looked at it more as a commodity. And I think that's one thing I've seen your team do very, very well, is really step into that where you're a trusted advisor for the
Right.
physician group, and that you're the person they call or you're the person they email when they want to do something new and they want some advice about that and how that's gonna impact their business and how to grow it in a smart way. So
For sure. And I'm going to add to that, if you don't mind. I mean, one of the things that Umpqua Bank is doing in kind of all aspects of our lines of business at the bank, but in particular healthcare. We're bringing our healthcare bankers, but we're also bringing our private bankers and our wealth managers and trusts and so on and so forth. Because we want to make sure that our physicians know that we're not just helping out. So let me back up for a second.
yeah.
I see it as this holistic thing where we're trying to bank the business, try to bank the business owners,
Yep.
and also bank the employees of the business,
Yeah.
right?
Yeah.
There's so much opportunity there to help out, and Umpqua Bank is expanding, and I love to partner with our other partners in the organization. So
That's fantastic. Thank you for calling all that out again. I think sometimes physician owners don't always look at it as that holistic relationship like you're describing. I think they think of it in its parts and pieces, like, oh, we have a loan, or oh, we have a place where we deposit, or that we're doing our bill pay from, or something. So it gets kind of, chopped up in pieces. So could you walk us through, if a group is looking for a loan, a little bit about fixed and variable rate loans and a little bit of pros and cons from your perspective?
oh yeah, I mean, with a fixed rate, obviously that's fixed for, that period of time, right?
Yeah.
So it's easier to understand what's the payment structure.
A little bit like a
Here's
car payment, I always say.
right,
Yeah.
here's my cash flow, right?
Yeah.
But from the variable perspective, typically when we're doing lines of credit, that's where you're going to see a variable rate, right?
Mm-hmm.
And the rates do kind of ebb and flow, right? Up, mostly up, and sometimes down.
Yeah.
And you may have a line of credit where it's zero, right? So they're not having to pay interest. They're in the money, right?
Yeah.
And I go back to that treasury management that we have in the rev cycle, right?
Mm-hmm.
If you have the cash, you have the availability to pay it down, you should. That's why, I mean, it's a business decision, right? Some of the larger organizations we work with prefer that variable, and they're dealing with their cash in various different aspects, trying to manage cash flow day in and day out.
Yeah. Well, that's great. Thank you for that. I want to make sure we spend a little bit of time talking about loan covenants. I think sometimes these big loan documents come through and
Right.
everybody kind of docu-signs them and they move on. And sometimes maybe we don't always read super carefully what those loan covenants are.
Well, I'm putting back on my credit hat here.
Yeah.
Covenants, because from a sales aspect, sometimes that could be a difficult conversation with a client. But the covenants there are to serve a purpose, and that's to measure where that borrower is at, right, and measuring our risk.
Yep.
And we try to keep it pretty simple. I'm not a person that likes to add 5 covenants. That's just too much. 2 is probably where I want to be. Maybe 3, just based on the complexity and size of the credit.
Yeah.
But typically, and I'm looking at typically, and I'm gonna talk about 2 aspects of covenants here. Kind of the sole practitioners with 1, 2, 10 practices, and they have a personal guarantee. We're looking at a covenant that's typically what's called a global cash flow, right? Because they're so closely tied to the business, there's a lot of ins and outs. And what I'm talking about is contributions and distributions, right?
Yep.
They're kind of flowing in and out.
Yep.
And that ends up on their personal tax return, as you're seeing these distributions, you're seeing cash flow go through. So we're trying to look at that as a whole, right? And then on the flip side, these larger organizations, we're usually looking at a debt service coverage ratio or a fixed charge coverage ratio.
Yep.
And so those typically can have guarantees, but maybe not. We're referring to that as recourse and non-recourse loans.
Okay.
And we're trying to verify that the doctors aren't taking all of the money out of the business, right? We're trying to keep money
Making sure that they can service their debt, which would be how the finance people would talk
Right,
about it. Like
right.
they can
And
pay back the loan. Yeah. Yeah.
I mean, over the last couple of years, and I think I've kind of mentioned it throughout the call, but it seems like we just have a lot of opportunities in the ground up construction, outpatient facilities, right? So these are large requests.
Yeah.
And typically those larger practices, they didn't have debt. So now they're taking on this large debt and we're having to explain that, okay, you're gonna have to slow down on the distributions
Yep.
so that you're keeping a certain amount of equity capital within the organization.
Yep.
So that's a hard conversation at times, but we're trying to make sure that we're telling or showing this is how your cash flow is going to change a little bit. But you're picking up an asset that, you're reducing your overall rent expense, probably if you were renting before.
Yeah.
Real estate does appreciate. So there's a lot of opportunities there.
Yeah. Well,
the
it's
other
a good distinction that you're making, that there are times that physicians are making investments in their practice. Sometimes it's the business itself, sometimes it's a piece of real estate, and that they need to be prepared at times to just at least understand their loan covenants and what the requirements are and how that impacts them individually. Like those distributions, like when you said they need to slow down their distributions, I know that is never a happy conversation, like, hey, we need to slow down everybody's distributions, Like as the administrator, if I go in and have that conversation, I get raw produce thrown at me. Like, okay.
Right.
So I think that's something important for everyone in our audience to just say, when you're signing those loan documents, there are covenants in them. And to at least make sure that you've walked through that with your finance folks or your banker, so that you really understand what those mean and what you're committing to. And, maybe not every single word of all the fine print in the loan document, but those covenants those are the important parts. So
I think our bankers, we do a great job of explaining those thoroughly so that everybody understands them. And I want to say one more thing about it too, that the word covenant, right? It gets thrown around a lot. And I don't necessarily believe that covenant itself if the covenant is blown, it's not something that's bad, right?
Okay.
It's simply for us to sit down, discuss what's going on in the business, and how are you going to turn that around, right? So that's the way I see covenants. It's an opportunity to talk about the business. Change, asking the right questions about how are you going to get back on track. So
Thanks for calling that out. I would say my experience has been, as long as the practice is performing within those loan covenants, then there's not a whole lot of conversation being had. The bank doesn't have a lot to say. As long as the debt is being serviced like everybody expects, then great.
I think the conversation aspect, we try to stay in touch with our clients as much as possible, right? Because it goes back to this full banking relationship, right? We want to be constantly talking with them, and we want them calling us and asking us as an advisor, hey, I'm thinking about doing this. And that's the best thing, is if you have that relationship where they're calling to bounce ideas off you, because it could impact the business. It could impact the loan documents. And we say covenant, but there's a couple different avenues about talking about covenants, because those loan documents can be pretty thick at times.
Yeah.
Right?
Those are long DocuSigns. Yeah, you got to scroll a long way.
Anytime I'm talking with clients, it's like, hey, just remember, if you're contemplating anything, run it past us first. So that we're ahead of it. We can seek to get approval for that, and then redocument, and then you guys are good to go.
Great advice for our audience. And if you don't have a banking relationship where you would think to call that person and bounce a new idea off, then maybe you need a new banker. So good to think about. How about some common pitfalls for practices who are looking for financing?
Common pitfalls. Well, I think it goes back to the conversations, right? Just making sure that what you're doing is in alignment with the bank, right? And then also trying to find a bank that is, if you're in healthcare, trying to find a bank that has that healthcare niche, right? Because you can try to do these loans through commercial banking. But there's aspects that your banker in healthcare banking is going to know a little bit more than they are, right? That's their niche. What I'm proud about in our organization is most of our bankers have a really long tenure here. I think the average is somewhere between 12 and 14 years.
Okay.
And this is what they've been doing, right? They're in healthcare. I think having a banker that really understands that is critical. So
That's fantastic advice, too. This whole entire series, this whole podcast is about money and financial issues inside of medical practices. And I always recommend our clients work with a healthcare specific banker, just because to your point, it takes several years to, really get healthcare, because the reimbursement or the revenue side of the world is so wackadoo. And I always say that's a technical term. It's really wackadoo how physicians get paid for what they do. So, I mean, it's like we can have an entire podcast just about this, right? So it's crazy.
I'm going back. I'm really thinking about your question about pitfalls. I think also is having all your documents in order. And then just depending on the size and scope of your business, what level of financials are you getting, right?
Yeah.
Are they completely prepared? Are they CPA, compiled, reviewed, audited? It's, what I think I've kind of mentioned it before, we try to custom tailor the products that we can provide. And it's not always necessary that we have the reviewed or audited level statements. There's other aspects, there's other tools that we can utilize. Typically looking at quality of earnings, it's something that it's another level of financial analysis, right? That the bank can understand what is the consistent cash flows over a certain time period, typically 2 to 3 years. Because you got to think too, the majority of our healthcare clients are going to be on a cash basis, not typically on an accrual basis, right?
Yep.
So not a GAAP compliant documents, but there's ways that we can look at these to understand them, to make sure we're looking at them correctly. So I would say to really understand where you're at and the level of financials and the request, the dollar request, because the higher it goes, the higher quality of financials a bank is going to
you're going to want. Yeah, exactly. And to your point, most groups are cash-based accounting, and probably not many have like fully audited financial statements. They might have a CPA help prepare them. So that's a good distinction too for our audience, is just understanding how your financials are prepared at the end of the year, and how much scrutiny, what level of scrutiny they're getting, and that'll help your documentation needs might be. So fantastic. Well, as I said, Eric, I always love to wrap up with this question for all of our guests on the podcast.
Hold on, wait. Can we go back to your pitfalls real quick too?
Yes. Yeah.
I think a third thing I can think of for pitfalls, and I think I mentioned it a little bit more before too, is the structure, understanding your structure. Because if you're expanding and you're starting to move upstream and buy more practices, it's good to understand the structure. And
so when you're talking like corporate structure, like governance, those
structure, governance, and then having like a flow chart of how things are, who owns what, where's the cash flow, is there a management company or MSO overseeing the AR, AP, cash, all that stuff.
Yeah.
I think having that stuff, established before you come to a bank, it helps us understand what you're trying to accomplish.
Really helpful. I like that, sort of the notion of a flow chart or a flow sheet for it. And that's something great, as physicians, you could ask of your administrator or C-suite folks, or of your corporate counsel. They could help you to do a very quick diagram of, kind of ownership and governance. Because some groups are really creative, how they put them together. And then we arrive on the scene and we try to figure it out as consultants. And it's, some days you're kind of scratching your head like, wow, you got really creative there. I know.
And it takes a lot of time to get through that and understand it. But it helps out having that resource on the front end.
Yeah. So. Oh, that's great. Wonderful. Well, any other pitfalls you can think of that we should be talking about?
Those are the three big ones that I can think of.
Okay. Great. We'll move to our last question, which I always love to ask everyone who comes as a guest on the podcast. And that is, what is your best advice for a medical group who are looking for a banking relationship or looking for additional capital?
I think we kind of just mentioned it, but being prepared, having all the documentation, and then just being very upfront and being clear about what it is that you're doing today and what you want to do tomorrow, and then a little bit further. I think that helps out tremendously, and that we can help structure or loan products or deposit products to help you get where you're going. And I think the other thing is, once you establish that relationship, communicating as much as you possibly can, circling up with your banker just to say, hey, are we missing anything? Do you have any other products that would help us with our daily cash flow, or even the personal aspects of the business owners, right? And employees of the business, because I think each bank has these products, and you want to make sure that you have that full relationship and making sure that you're doing everything you can. So
great advice. Well, Eric, thank you so much for sharing your expertise and a little bit of an insider's look at banking and banking relationships and financing, and really appreciate you being here today.
Bill, I love always talking with you. You always have a lot of good insights too, and I know I call you a fair amount to get some of those answers. So
happy to. We love getting to share clients with you. It's great. All right, thanks.
Thank you.
Thanks for tuning in to today's episode of the Medical Money Matters podcast. Before you go, let me ask you, are you ready to take your medical group's coding to the next level? Because that's where Code Mastery comes in. Code Mastery isn't just another coding program. It's the ultimate physician-to-physician training solution to maximize your revenue and empower your physicians with the skills they need to code confidently and win the coding game. From comprehensive high-octane training to actionable insights, Code Mastery gives you the edge you've been looking for. Don't leave money on the table. Visit healtheps.com/codemastery to learn more and take control of your coding today. Let's transform your practice's financial future starting now. See you next time on the Medical Money Matters podcast.